Hey guys, I'm going to teach you how to use the CCI indicator, but not like you're used to using it. This is a modified version of CCI. It is not being used for oversold and overbought conditions. In fact, I think it's terrible at that. But let me show you how great it is at timing your entry into those supply and demand zones. So let's get into it right now. So I have the full contract of the S&P Mini on here. This is called the continuous contract. And this is the best symbol to use on TradingView for back testing. All we're going to do is use the 1 hour chart as our trending time frame and use the CCI indicator as a filter for our supply and demand zone trades. Now, the formations that you find, like drop-based rally, rally-based drop, all those formations that create the level of imbalance are going to be on your 15-minute and your 5-minute chart. So let me give you an example here. First of all, let's go over the components of the CCI. You've got the positive 200, positive 100, the zero line, negative 100, and negative 200. So what you want to do is line up your trend, and you can see if you just eyeball this. Let's look at the 1 hour chart here. You can see that this is a downtrend because you have, here's your low, here's your lower high, here's your lower low, lower high, and then a retest of this lower low. So this is a downtrend. And if you're still confused, if you're still a beginner and that's hard for you to see, then get yourself some kind of trending indicator. Okay, I built something for myself and I call it the Trend Cloud. Trend Cloud day trading system. If you would like this, shoot me an email, chris@chrisgiuliano.com, and I will show you how to purchase this. So the downtrend is the present situation. And what we have here is a signal that is showing a strong uptrend on the CCI indicator. So those are mixed signals. And what you want to do is match the CCI when it goes below the negative 100 line. And that means you're in a strong trend. So between negative 100 and negative 200, all in this area, you're in a very strong downtrend. And we get that right about here, right at this little doji candle right here. So at this point in time, if you're a supply and demand zone trader, you're going to be looking for pullbacks that take place in this general area here. So where does this usually pull back into? Well, it usually pulls back to some level of imbalance. Let's turn this off. And on the 1 hour chart, you can see, even if we just did something like this, okay, that's your market edge there. So let's go to drop down to that 15-minute chart, and you can see when you put something on the 1 hour chart, it will automatically draw it on the other time frames that you have. So we've got the 15-minute here. Now, what looks good in this 15-minute area? Well, we've got something right here, don't we? We've got this large base drop that broke structure right here. This is looking pretty good. So let's tighten up this supply zone, and it would look like that. So that is your first area of interest. Could it break through this and go to this supply zone? Yes. Could it break through all of this and go to this supply zone up here? Yeah, it could. So now you're saying, well, how is this going to help me? Well, what you have to do is on the pullback, Okay, when this starts to pull back, you have to make sure that your high time frame CCI indicator does not blow past this positive 100 line. That's why I made it green. So as long as the pullback into this zone, into all of these zones, actually, you don't know which one, you have to be comfortable with that type of uncertainty. Okay, you'll never know which is the right zone. All you can do is, is take those small losses until you get the right zone. I hate to tell it to you. I don't want to sugarcoat anything for you, okay? So that's trading. So if you don't want to take these losses and you say, oh, I'm just going to take the very last end all be all zone, that's fine. In fact, if you take a look at this pattern here, here's the original zone that broke through all of this structure here. And then these patterns formed inside of this larger leg. So this would actually be, in my book, this would be the better zone to take. It's the one that's worth waiting for. Now, if you drop down to the 5-minute chart, what do we see here? Well, on the 5-minute chart, we see this, and we see this. So again, which zone is it? You don't know. You would have to take either just the last one, or make sure that when you take these zones, let's sell one. I'll give you an idea of what this costs. $87. You have to be willing to risk $87 once. And what would this zone cost up here? There we go. $175. So this is an $87 zone, a $175 zone, and this bad boy up here is going to cost you $212. So the very last one is the most expensive. You have to make sure that the price of each one of these zones is within your risk tolerance, meaning 1% of your total current account value. So as long as price pulls back into these zones or into this area here without going past this green line, those are safe zones to take. Let me give you a few examples here. Here we have an uptrend on our 1-hour chart. There you go. Uptrend. Candles are green. Look at how the pullback here, here, and here. Look at how these pullbacks taking place are pulling back into the blue box without going past the negative 100 line. You're in an uptrend. You're looking for demand zones. The pullbacks that are taking place in this 1-hour uptrend are pulling back on your lower time frames, okay, the 15 and the 5. They're pulling back into your lower time frames into areas of demand right here. So these areas of demand are safe to take. It's safe to take this because, look, right here, pulls back into the blue box, doesn't go below that negative 100. Pulls back into the blue box, you're safe to take this trade. This one pulled back into this demand zone. This pulled back into this area here, okay? This is a rather large demand zone right here. You'd have to take this whole thing. So you see how everything is pulling back into the blue box without going past the negative 100? That is what you're looking for to use CCI indicators. in conjunction with your supply and demand zone trading. If you like this video and you think it's valuable, please give it a like, subscribe. I am just starting this YouTube channel. If you would like to share this with another person who is trading supply and demand zones, maybe if you went to Online Trading Academy and you'd like to share this with another OTA student, please do so. And I will see you in the next video.